The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, welcome back here to the Diagnostic Trading Hour, and let's check out where the markets are at right now. We got the S&P. It is down 7-8 points right now. We got the Russell down 18. NASDAQ currently down 34 with the Dow down 8. Copper is down barely anything, pretty much unchanged at the moment. We got gold down $4, and silver is currently down a little over 0.5%. We got natural gas up over 2.5%. Oil just bouncing back and forth. So depending on the contract you're looking at right there, it is currently down about 0.2%. We got corn is, currently up 0.5%, up 2 points. Soybeans pretty flat on the day, also up just a couple points there. Euro dollar up 14 pips. Aussie dollar down 19. We got the pound dollar is up just 1 pip on the day. A lot of quiet markets, a lot of quiet activity going on right now. Looking over at the dollar franc, it is down 12. We got the dollar CAD. It is flat on the day. Dollar yen is currently up 24 pips. Aussie yen up 9. Euro yen up 65. Pound yen up 50. And the euro pound is up 6 pips on the day. So that gets us caught up on everything and where the markets are currently moving. And so what I want to do now is check out what's coming up this week on the news. We had a little home sales report this morning, and that came in a little. Pending home sales came in a little better than expected. You're at 3.4. Gave the market a little boost, but it wasn't able to hold on to that. You're at 3.4 and an expectation of 1, and they're actually able to revise up the last number up from negative 0.8 to negative 0.5. So on both accounts, it was a positive number. It did give the market a little bit of a boost, but like I said, could not hold on. And I'll pull a chart up. We'll look at that real quick. Just looking at the S&P, and so right here, go right into it. As you'll see, it was rising on up there, and that's right on the report here, 9 a.m., 10 a.m. Eastern time. And got about a nice 30-minute impact, and then gave it right back. So really could not just hold it since this market wants to head down, determined to head down. And so it wouldn't allow that great report to get in its way. Let's see, tonight, reminder, Japan, they have a bank holiday. So that, of course, is going to affect liquidity. And they Showa Day. And so it will be the holiday they're observing. And let's see, of course, you can still trade everything. It just, obviously Japan's not trading their own currency. That can affect it a little bit. And let's see, let's see here, Showa Day, I'm checking that out. And what is the Showa Day? It's the Emperor's birthday. So, formerly known as Greenery Day. And so it's a golden week with a bunch of, public holidays and things of that sort. So, but anyways, that gets you caught up on that. You just want to be aware when those holidays are there because they can affect things a little bit. And we've seen that even today. A lot of implied volatility has been a little bit lower with, all the pumping out of Japan being on pause for an extra day. And just seeing a little bit lower the implied volatility than normal. Let's see, what do we got going on tomorrow? We're going to have the German preliminary CPI. That's coming out. Not usually a massive market mover. And let's see here. I just want to see if there's anything that even has it didn't even register on my list as something to even be worth really putting too much time on. We got, let's see, trade balance. What is that tonight? But that's on New Zealand there, right? So that's really not going to do much for us unless you're a New Zealand dollar trader. And I don't usually trade it that much because I like to trade. If I trade it, most of my trades I'm either trading futures with Nadex, just Nadex, Forex with Nadex, And I just due to that, I like to be able to hedge and hedge off positions, insure positions, lock in profits, but still give room to run on my contract. So with that, I usually like to trade the contracts that I can do that with easily over on the Nadex exchange. So that sort of knocked that one out. We do have preliminary GDP coming out, though, over on the British pound, and that usually is a decent mover. That's coming out at 4:30 in the morning, so that's going to be over there again on pound dollar. And so if I pull up a little report for you right here, again, preliminary GDP quarter over quarter coming on out. What kind of expectations should we have for this announcement? What are some of the ways that we could play it? Is it a big enough move that we could straddle it, strangle it? Should it not matter? I mean, these are all things you want to know about the news. You want to be aware of it, even if you're not a news trader. Saw a news trader this morning. I was like, hey, why'd you take that trade? That was like 8 minutes before a new home sale, or the home sales report came out. He's like, oh, I didn't think about that. So just always being aware so you don't get hit by that train. It doesn't even mean it's a high impact report, but it can knock a position 3 or 4 points on the indices, and against you, even if it's just temporary. So it's always good to be aware of those reports and know when they're coming up. And I like to use a little calendar thing that'll pop up on my computer and remind me, hey, new home sales, 30 minutes, or whatever. How much ever notice I think I need. So I'll just put them in there. It takes a minute, but it's worth it because I can, I'll spend a few minutes, I'll customize it, and I'll have it set up for the week, and then when I'm sitting there, I don't forget. But anyway, so we got the quarterly GDP coming out. Historically, has some pretty good moves, about 70 pips high to low. And that's on pretty much the pound dollars, really the main pair. That's about 70% of the time over the last couple of years. Over 80 pips high to low in the pound yen, but only about 50% of the time does it do it. Actually even hit 50 pips. So really the better probability pair of that is pound dollar. And again, that tells me high to low, which does not tell me the whole story. I want to see the whole story. Okay, I want to see release to high, release to low, what happens before it. I want to get all those different pieces put together. So last report, let's see what we got here. We got 35 pips, 30 pips, 25 up, 25 down. So that's 25 up, 50 down. So basically a 50 pip high to low. Looks like volatility's really dropped off in the last 12 months. So that'd be like the New Zealand dollar report if you're doing that. So now let's go into the pound dollar report and go, hey, what's the impact on that one? How much does that consistently move? And because that's really exciting. I like to focus on the pound reports. But even that one, the impact has not been as high. So again, let me recap that for you on pound dollar. We got about 30 pips up and on the last report, about 21 down. So that gives us 50 pips. So you always want to be aware of that high to low versus that actual release to up or down, because otherwise you'll be hitting break even at best. Scrolling on down, we got 26 down and 48 up. So that would give us a 75. Sorry, there, I keep wanting to sneeze for some reason. But anyways, about 75, plus. But actually, if I look at the whole move and measure the total high to low, it's almost like 85 pips. But it flew down 26 pips in January. It flew up 48 pips above where it was at the open of the release. And then it closed like at 11 pips from where it was. So that could really make one think when they see 80-something pips that it moves 80 pips. Well, it does, but it doesn't mean you could make an 80-pip move on it. Looking over at December and checking that out, about 35 down, negative, 35 up, positive, so a 70-pip move, but only about 35 in either way, and nets out at about 5. Looking at October of last year, this one, probably one of the bigger moves, about 42 pips. Looking at September, about, let's see here, about 57. So that was a pretty big move. That was a solid down move there, and which is rare. And then now we had a massive one in July of 2013. Market ran down 100 pips, but it came back up to like negative 37 pips from where it was before the release. So we're talking, basically an 80 pip retracement on that fall. So massive fall, massive move right back. And looking over at June, we got, so further back we go, I'm starting to see like it had really good moves. So I can see where the stats looked good over the last 2 years, where we were having some of these like 70 and 80 pip moves. But when I look in the last, 12 months here, the last like half dozen reports, we're not seeing much of anything. And it just has not been a big surprise in the markets whenever the report has came out. So my strategy on it would actually be an iron condor for about 50 to 60 pips minimum that I can pull off, buying a lower spread and selling a upper spread that expires at 7 a.m. And due to most of the time you don't get a massive move previous to the announcement, I'd probably even start the trade as early as possible, around midnight. And the reason for that is that gives me 7 hours of premium. We're trying to make that 40 or 50, ideally at least 50, really easy to get. And the majority of the time, if you would have played the trade out that way, it easily would have came back. And I'm going to go through, I'll count your ones that would have, let's see, one would have lost $25, okay? Another one, one I would have lost like 100, so it would have got hit. Another one about 25. Okay, so out of the last three, we had about a loss of about 150. And I'd say an average profit of $30, if not more than that. If I really got specific, I know it would be more. But $30 on the other 9. So you'd have a few of those wiped out, but overall you'd be net profitable playing the probabilities with the profitability. If you want to limit that further, you could use stops, basically at 100 pips, and that really would have capped your risk on the one that had that massive loss that went just way, way, way up. Yeah, it would have cut that down for you. But overall, I mean, it's a good, solid strategy, and it looks like it's worked well. There's just a few surprising months out of the year. Looking at the one from last year, it was a 0.5 move. Actually, let's go to April. So, yeah. Anyway, so we'll cover that when we get back, but stay right there. We'll check out what else is coming up this week.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
TFNN is back with another Tiger Dollar special, and as part of this promotion, not only can you receive up to a 25% bonus on whatever you spend, but you can also gain access to a 5-part live webinar series with Tom O'Brien taking place the week of April 28th. Each morning during the week at 8 a.m., Tom O'Brien will walk you through how he sets up the market live and digest the previous day's trading action while analyzing overnight markets abroad in order to anticipate what kind of trading day to expect. Each 60-minute live morning webinar will be archived by around 9:30 a.m. that very morning, so that if you can't attend live, it'll be available for your viewing pleasure on demand whenever you're ready. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire. So now is a great time to lock in extra savings on all TFNN products. Don't miss out on Tom O'Brien's 5-part webinar series. Get your Tiger Dollars today with up to a 25% bonus on whatever you spend before this special is over by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, we're going back here to the Diagnostic Trading Hour. So let's check out these markets. We got the Russell is just flying down, getting hammered. And it's been just in a really, really nice trend all day. And it had a little pop, like I said, right there. New home sales, trying to pull everything up. But that didn't even affect it as much. It's actually started to do run a little bit earlier. Anyways, let's get back on the news. But keep watching that. It's moving on down past the 1.5, going on down to 2.18 on the deviation levels there. The trader just noted to me. And let's see what else we have coming up this week. That is news you want to be aware of for your trading plan. Okay, so let's see what do we got. We're going to have the British CPI number. We talked about that. We're going to have the British GDP number. We're going to have the ADP NFP employment report. That's coming out Wednesday. It's not the main NFP. That's actually Friday at 8:30, okay? And then we'll have the Canada GDP coming out at 8:30 on Wednesday. We're going to have the U.S. quarterly GDP coming out on Wednesday at 8:30. It's going to be big. Then we're going to have the FOMC interest rate coming out on Wednesday at 2 o'clock. So expect a lot of flat markets in a couple hours before that happens. Also, that can lead to sort of a flat market on Tuesday afternoon as we're going into that GDP. Like sometimes that'll smooth the markets out. Just be aware. And then Thursday can be a little wild. So post FOMC and everything else. And then UK manufacturing PMI will be coming out on 4:30. That's usually a good one to trade. US ISM manufacturing PMI might be able to iron condor that one as well. So we have a nice list. We have a nice roster coming up this week that we can go to and we can look at. There's a lot of various things that come out. A lot of these Forex calendars, they rate everything really high impact. Every time a bank of whatever, FOMC is going to talk, it's high impact. It's be aware of it. It may not even be aware of it. I mean, it's like some business meeting at the local club. Just because they're talking doesn't mean it's going to move. Now, if they say something that's a surprise, it gets picked up by a reporter and pumped out there, that can move it. But unless they're one of those that, has a history of surprising the market, then usually it means nothing. Just because they put red, that may mean it is important maybe for the currency in the long term. That doesn't mean it's going to make it move all over the place. People go and they'll check out these red ones and they're, okay, I'm going to straddle that. Yeah, you're going to be really disappointed if you straddle consumer confidence, okay? It's not going to work that well. You got to be aware of weird things like on the yen here, you got this monetary policy statement. When is it going to come out? You don't know. So the best thing you can do is go look at the history. This is what I'll do. And I'll look at the history of when that report's going to come out because it's not a scheduled, it's a tentative. Let's see, what time do they usually release? Like 10:50, 11, 11:30, 11:20, 10:58. So probably somewhere between 10:30 and 11:30 would be a safe, assumption of when Japan's going to release this monetary policy statement. As far as expected movement, it's really hard to have an expected movement calculation on a report that has the various times that it's released. You have to go in and manually build that each time, okay? You wouldn't build this pool like, hey, what does this pair move from this time to this time on these dates? So it's a little bit more tricky. But you can be aware of it if you're trading that evening for what you want to do. Okay, so let's check out what we have over here on the ADP NFP report. See if I can find the best pair for trading it. And it's like they're pretty much equally non-significant. And let's see. Overall, I mean, even to end of day. Remember I said a lot of times that report will come out and day sort of seems to smooth out and go flat. You'll see a lot of flat days on it. Okay. So with a couple exceptions, but let's see here. Yeah, all right. We'll cover NFP right after this break. Stay right there.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome back here to the Diagnostic Trading Hour. And so we're going through and just making sure you're caught up on everything. And I want to make sure we have every report listed out. So you got your news plan, you got all the pieces put together. And okay, so we got the monetary policy statement. We already talked about that. You need to make sure you have that one covered. We're going to have the NFP, ADP, unemployment report. And let's see here. So we go to that. What do we got? What are the stats that we might be able to use? The report's going to come out at, 8:30? Let's see here. Pull up the calendar. Let's pull it up. Let's look right at it. And really nothing major there besides the GDP for the pound. So it's growing on over to Wednesday. Of course, got oil inventory. Make sure you're on top of that. We got FOMC meeting minutes. Get me to, there we go, this week. That'll be a lot easier. All right, so ADP, NFP, and at today 15 with Canadian CAD coming out right after that, and the advanced GDP on the U.S. coming out right after that. So we're definitely going to have some volatility the question is, what's going to give us the best bang for our buck, having all those at the exact same time? One thing I like to do is I'll look back at the history, and I'll open them up, and we have like several major reports coming out at once. So we got advanced GDP here, we got Canadian GDP coming out here, and we have ADP coming out right here. And so I can look at these and go, like, when is the last time all these lined up? So, because maybe they line up often, maybe they don't line up that often. So my stats can be a little bit different if I'm looking at a report where it's standing by itself, okay? So notice, like, March, nope. February, nope. January, nope. December, nope. November. So, like, so far, we don't have the U.S. and the Canadian GDPs coming out at the same time. And, literally scrolling all the way back here and not really seeing them line up. Now, I can go down on my other calendar here. I got the quarter-over-quarter preliminary. Looks like February. That can happen. You got the month-over-month. So I guess it matters which, if you're looking at advanced GDP or if you're looking at, there's a few different ways they measure, different releases they have. But on all these reports, basically combined, pardon me, noticing that we actually don't get an incredibly large move. Just to read the last 12 off to you. Okay, this is on U.S. CAD. About 10 pips by 11 o'clock. Report before that, about 40. One before that, we got about 40 pips on that one. About 20. 12. Let's see here, 20 had a 30-pip move, but ended there. About a 20 high, but came on back down to basically flat. We have a move down of about 20, then back to flat. And then, move up, and then by 11 o'clock, 25 pips. One exceptional move actually happened in the last 10 minutes. Went from 20 to like 50. There must have been some report that day on the 28th of June. Makes me curious. So I'll go in here. If I see just a really weird move that doesn't seem to line up with the other ones, see if there's something interesting that happened on that day. So here's June 28th. We had a big move right there, like at 10:50. So was there a currency announcement? That's sort of a weird time for an announcement. No, it just was a big move day. So I could, of course, go in and look at news and like search news, search for that specific date. But anyways, there's still an anomaly there. One day it moved up about 45 pips, came on back down to about flat. And then let's see, another one, we had a move about 45 pips. If you could get 40 to 60 pips on this as an iron condor, which sounds crazy, a neutral strategy on GDP, but those are the stats over the last 12 months. And I'm trying to look at them individually, like, one at a time and together, and where they merge. And I'm learning to see the same thing each time. That's on USD CAD. On Euro Dollar, like, it moves even less. So, let's see here. Yeah, it's even a smaller move for the Euro Dollar. And so I would try to get at least $40 on that one as well, $30 to $40. But either way, there's there's one big move in the last 12 months I see on Euro Dollar. Moved like 100 pips between the release and 11 o'clock. But all the other ones are like 15, 20, 25. So Euro Dollar, Dollar CAD, easy way to play both of those announcements. And really, I would just go ahead and factor NFP in with that. The ADP NFP, okay, the ADP employment change. And it really just hasn't had just a massive impact in and of itself on much of anything lately. There's a lot of reports at one time, but that ought to just really explode the implied volatility quite a bit. and there's like one big move on euro dollar on it. So as far as like, if you're going to play the trade, now understand you got to play the trade, that announcement over the 12-month cycle. You can't just, compare it all to, just one announcement, or compare all three announcements that week and go, oh man, like let's say you do 5, or let's just say you did 10 trades this week. You're 5 loss, 5 won. No, you got to compare all the GDPs together. You got to compare all the, you got to compare that trade against that trade. You can't go compare your condors and your straddles and your directionals and say what your system's percent is, unless you're saying my system is doing everything combined all at once. I mean, that may be what you're doing, but what are the rules for each system? And so you're going to have different rules for different news announcements. And you got to let those probabilities play out. I mean, probabilities are all about having a sufficient sample of data to be able to correctly come out with ideally an expectancy, even though there is no such true thing as expectancy. There's at least a, probability best guess based on something more than a hunch. This is how the market has acted. This is what the implied volatility does say. This is what it consistently does month after month, year after year. I can't tell you exactly when rush hour is going to happen, but I pretty much can tell you exactly when rush hour is going to happen on the freeway. Now, something may happen. There may be a holiday. There may be something else that happens that changes everything that I don't expect. But that doesn't mean that I couldn't have a probable expectancy of something happening time and time again, just because that's how things work. That's the cycle. That's how much money goes in on a buy or a sell whenever that announcement comes out, before that announcement comes out. And you don't risk all your money on that expectancy. I understand that even if there's a 90% probability something's going to happen, there's a 90% probability it has happened, not it's going to happen. Meaning, let's just say I think that over 100 trades, there's 90 out of 100 of these are going to work. I still always want to have that reality check that means 10 won't. And that means I always want to have that reality check that there's a 50-50 trade, that this next trade is going to be in the 10% losing bucket or the 90% winning bucket. So no matter how confident I am, I always want to temper that with the reality that there is a 50-50. This next trade is a loser. Not a 50-50 on every trade over the next 100, okay? But at least on this one trade, I always want to have that expectancy, because otherwise I'll risk too much, because I put too much confidence in a probability number, and I won't survive long enough to see the 100 trades and let the probabilities play themselves out. Let's see here. So that gives us the GDP for the U.S., the GDP for Canada, the GDP for Britain. That gives us the ADP NFP report. Consumer confidence, I guess we could look at that. Usually not anything worth looking at, but it could be, again, I do at least have the stats on it, so I can tell you if it would be a decent trade. Yeah, I mean, it's, let's see, I got to narrow it down because it's just so little time. Yeah, see, it's let's see, 30, 15, 45. I'd want to get like $40 on the trade because it's so random. I don't know if you're going to be able to pull that off on euro dollar on how things starts in the morning. If you get $40 for a 10 a.m. expiration, then I'd go for it. If you can't get that much, I'd probably back off. Now we got Fed funds rate coming up Wednesday, and I've been doing iron condors on these most of the time lately. You got to be fast, But the last announcement was pretty big. Market moved quite a bit. We got let's see, on the euro dollar alone, we got like an 86 pip move. Let me go over and check out the pound, because the pound is usually one that's just loaded with premium. And yeah, let's see. If we were looking all the way to 3, we got like 135 pip move, 35 pip move, 75. Like it's like 50 down, 70 up, and it came on back down. It really did a pretty decent job of retracing, but still about 35. The one before that, it just ran up the entire time. The one before that, right there, ran all the way up to like 130 pips. We got like 70. So the real trick on this, that was like 170 pips. I mean, there could be some big moves. We'll have to really spend some time, maybe the whole show, when we're just analyzing the different condors tomorrow for the Fed funds rate and going through all the different currency pairs you can do them on. Because if we can find the right combination, then we may actually have, we may do something like a straddled butterfly or strangled butterfly. Because these butterflies are going to be really expensive when Fed funds comes out. And you'll go in and, I mean, it'll cost you $80 to do the trade, which means you can basically have 160 pip, like 1-to-1, which is so rare. Does it happen? Yes. Does it happen often? No. So, you can set up just a really good trade where you don't get hammered on it, most of the time. Like I said, there's, I think, two trades in the last year when it actually hit 160, which hammered means 1-to-1, okay? You lost 100% of your profit goal. But that could definitely be a solid trade setup for us. So we'll go into that in detail. And that's going to be 2 o'clock on Wednesday when that report comes out. Scrolling on over to Thursday, we're going to have the manufacturing PPI and the construction PMI are both going to be coming out at the same time. I'm trying to look at the history here. That doesn't seem to be a consistent thing. I just want to make sure I'm right before I claim that. But let's see here. The pound has gotten off lately too on its release schedule. It's been sort of interesting. But yeah, so it's usually they're a day apart. They're going to come together. That may add to some volatility. But usually, let's see here, most of these do not move much at all. So as far as the manufacturing, we're talking like 30 pips. If I go over and I look at the construction PMI, and when I say 30 pips, I mean like from midnight to 7 a.m. On the construction PMI, pretty much get this, actually usually less. It's like either 15 or like 35. So the only difference here is, like I said, we're combining the two, and we don't usually do that. Usually there's one or the other. But even when the number is positive, like a lot of times it'll go up and then come right back, or it'll go down and come right back. It's not usually just a massive trailer after the news announcement comes out. And so I wouldn't put a whole lot of faith in a straddle on that report, despite whatever up-down stats may say or whatever. You want to have really the full picture. And then let's see, personal income and outlays here in the U.S. That's going to be coming out at 8:30 on Thursday. And so we'll go into that. And then, of course, we got the big boy. We're going to have, of course, we got PPI coming out, but we're the big one, which is going to be employment change on Friday. The NFP and unemployment rate right here in the U.S. All right, stay right there. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, we'll come back here to the Diagnostic Trading Hour. And so looking at this and let's see what we got on the reports for Friday. So we talked through a lot of the reports already, but we got the big one coming up on Friday, and that is going to be, let's see here, we're going to have the NFP, the unemployment or the employment rate reports. So with that, I got to update. I'm like, what is going on? Where's my stuff? Okay. So this Friday here, let's update the little calendar here. I was still in last year because I was looking back at that report. On May the 2nd, where we have our unemployment rate, our non-farm employment change. You'll be releasing those, by the way, at 5 o'clock. Not usually one that I pay a lot of attention to because it's the European. It's not like the German one or whatever. Usually has less of an impact because they're gathering the information from the other countries. So the information is usually known, so it's not a big surprise. Okay? So even though they rate it really high, everybody ought to know what it is. It ought to be priced in already. Okay, so with the employment change and scanning across all the different pairs, trying to find that pair that consistently has the biggest move, it's going to be your crosses, of course. But and you can't actually do crosses. There are a lot more crosses you can do on Nadex than people realize. It's just they don't know how to put them together. But you can actually, like, you can trade Euro CAD and Euro odd and, pound odd and stuff like that. But you just have to combine two spreads. It's just like you would do if you only had access to pound dollar and dollar yen. You'd buy the pound dollar, you'd buy the dollar yen, and then you'd be long the pound yen. Or you'd sell the pound dollar, you'd sell the dollar yen, and you'd be short the pound yen. So, pretty simple. You can actually make your own FX pair. But, so if you wanted the biggest bang for your buck, you'd actually go for Euro CAD or Pound CAD. They actually have the biggest moves. So, like, if I scroll through and see, is that a consistent thing? Yeah, Euro CAD and Pound CAD again. Let's see here. All right, Euro CAD, Pound CAD backing off a little bit. Pound yen taking the lead. I mean, it was in second place before, or third place, I guess, before. All right, so Euro CAD, Pound CAD again. So we might have to look at this. We might try to see. I know I've talked about it, but I've never just fully, really dove into it on our show before. But these numbers are big enough that it really could be worth doing. I mean, we're talking like 75 pips in 30 minutes. So, let me go in and see maybe a little lesson on how to make a synthetic position and a synthetic straddle and some of the benefits that you would get from doing that over on Nadex that you would not get even being directional. Because if you're long, you can still lose that infinite money short. But, how do I put this? If you buy the pound yen, and the pound dollar goes up, and the dollar yen goes up, you don't see that much profit. But if your dollar yen is limited in loss, and your pound dollar's not, like it's going to be able to make that profit all the way up, then you actually can make more money by doing synthetic spread than you could by trading a underlying cross. But we'll make that our Thursday project for Friday. Tomorrow we'll focus on the Fed, and then we'll play it out live right here. All right, you have a great day.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.